When it comes to what most would consider to be an ultra high yielding ETF, something like the Yield Max Tesla Option Income Strategy ETF known as TSLY. For the most part at least, even though some of these ETFs have trailing 12-month dividend yields north of 50%, a lot of these covered call ETFs similar to TSLY have one thing in common, and that's the fact that the underlying asset price decays over time, making the investment not worth its while even though it offers a massive high yield. But in this video, I'm going to explain why the SVOL, or the Simplified Volatility Premium ETF, is actually an ETF that I've been buying quite a bit of as of recently. And of course, why I think it might be the one and only ultra high yielding ETF that I think is actually worth picking up some shares of. Now, if this interests you at all, make sure to please stick around, drop a like down below, and let's get into it. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So before we go over some more of the performance of SVOL, at least historically, and show you how much in dividends this ETF offers, heading over to the Simplify ETF website, it says SVOL Simplified Volatility Premium ETF. It then says the Simplified Volatility Premium ETF SVOL seeks to provide investment results before fees and expenses that correspond to approximately 1/5 to 3/10 the inverse of the performance of the CBOE Volatility Index or the VIX Short-Term Future Index, while also seeking to mitigate extreme volatility. They then said, we believe many traditional sources of income are failing to meet investors' needs in today's low yield environment. But SVOL aims to provide an attractive income stream and source of diversification while seeking to avoid risks inherent in other income producing assets. The fund short VIX position provides investors an optimized exposure for monetizing the premium in the VIX future market. A modest option overlay budget is then deployed into VIX call options to help protect against adverse moves in the VIX. So with this sort of interesting alternative strategy, SVOL shorts the VIX and earns a ton of premium for doing so, but all along they still offer a modest overlay and some VIX call options just in case things go sideways. Now, some more important information about VIX, the gross expense ratio. This is probably one of the worst things about this ETF, even though nowadays with some of these ultra high yielding ETFs, investors are sort of numb to say 1% gross expense ratios, etc. But SVOL does have a 1.16% gross expense ratio. And again, this is partially because this asset is so actively managed. Now, total assets under management is $609 million, which is up quite a bit year over year. Now, the distribution yield for SVOL, we're going to go over the dividend a little bit deeper in a second here. But as of right now, we're talking a 15.88% distribution, which is much higher than pretty much all dividend stocks and ETFs across the markets, again, until we get into these ultra high yielding options. Also important for those income seekers out there like myself and like probably a lot of you guys, SVOL does pay a dividend on a monthly frequency, which is pretty nice, especially if you are interested in reinvesting consistently a little bit faster. Now, I sort of mentioned during the start of this video that these ultra high yielding ETFs for the most part have two things in common. They all pretty much pay a crazy amount of dividends, which is what attracts investors in the first place mostly, but also a lot of these super high yielding ETFs, at least long-term, decay in share price, making the investment not even worth investing into even though it's offering a massive high yield. Now with SVOL over the last 365 days at least, this ETF is actually up 2.2%. Which I get it, during the same exact time frame, the market has performed much better than this, but keep in mind, this ETF is paying around a 16% dividend yield on a yearly basis, at least as of right now. Now on the max time frame, just to be fair, SVOL since around May of 2021, this ETF is down 9.48%. So although this ETF has decayed a lot less than a lot of the other ultra high yielding ETFs out there, it is a fact that even SVOL does happen to have some decay on the long-term max time frame. But a 9% decay over the last, say, 3 or so years is definitely not going to make this investment what we would consider a bad investment, considering this ETF has a 16.18% trailing 12-month dividend yield, which is obviously massive. Now, the reason I started buying some shares of SVOL, I think maybe 6 or 7 months ago, is because this ETF, at least since about May of 2022, has had a very consistent monthly dividend distribution of around 32 cents or so on a monthly basis. That, along with the fact that the ETF has a pretty interesting alternative strategy, which I think it's important to have some exposure into some alternative strategies throughout my long-term portfolio, but also the fact that the SVOL has not really decayed all that much in ETF price, at least over multiple different timeframes. Now, one of the main reasons that I'm trying to build up a position of SVOL as of current and that I have been building up over the last months is because a relatively small amount of money invested into something like this can generate a crazy amount of income on a consistent basis. Take a $3,000 investment into SVOL, for example. $3K into SVOL can buy around 130 shares of it, more or less. Now, SVOL pays right around a 31-cent dividend on a monthly basis, so out of a $3,000 investment, an investor in theory could earn over $40 per month in dividends. Now, obviously, it would take about 5 times as much money to earn that same amount in dividends if you wanted to invest into something like VOO or like SHD. And by no means am I trying to compare this style of investment to something like VOO or SHD. And for me personally, I think it's also important to mention that something like this, an alternative ultra high yielding investment like the Simplified Volatility Premium ETF, would never make up more than say 1 or 2% of my overall portfolio. But like I said a minute ago, having some shares of it and stacking some shares consistently in order to really raise the amount of dividend income that my portfolio receives on a monthly basis, to at least as of right now use the cash to reinvest into more shares or whatever I'm buying, but again sometime in the future use the money hopefully to be able to use it on a monthly basis to pay for my bills, pay for travel, pay for vacations, take care of my friends and family, etc, etc. But with all that being said, I think a lot of you guys might still be wondering, well, how good has SVOL actually performed since the inception of the ETF? And if we were to compare it to the S&P 500, the SPY ETF, this is exactly what we get. So if we were to have started with a $10,000 investment into both SVOL and the SPY ETF, and this was back in May 13th of 2021 when SVOL became a thing, a $10,000 investment into SVOL with dividends reinvested along the way would turn into $13,120. Now this is only over a 2.67% year time frame, so again this ETF is relatively new, which is just another reason why I personally would never invest a large portion of my overall net worth into something like SVOL, personally at least. Interestingly enough, SPY has turned a $10,000 initial investment into $12,110, meaning that SVOL has outperformed the SPY ETF by over 3%. Now again, I'll preface this and say, this is over one specific time frame. I think SVOL, along with most other stocks and ETFs out there, are going to have an uphill battle when it comes to beating the SPY. But still, we have to call it like it is. Over the last 2.67 years, SVOL has returned a total of 31.3%. Now this is with dividends and with the price return or even decay included, where SPY has returned 21.10%, meaning that SVOL wins at least in this time frame. So is SVOL the Simplified Volatility Premium ETF worth investing into, and is this ETF going to be an ETF that you can find in my portfolio for years to come? Now the answer to this is that I personally am interested in buying more and more SVOL over this next year time frame. Now in regards on how many shares I plan on buying, just a few shares here and there. Like I said, this is never going to make up a large portion of my portfolio, but still, by investing a relatively small amount of money into something like this, you could in theory really boost your overall monthly dividend income, which is exactly what I'm trying to do for my portfolio. But when it comes to the Simplified Volatility Premium ETF, I want to hear from you guys down below. Is SVOL something we could potentially find in your portfolio in the future? And if not, what are some of your favorite ultra high yielding ETFs as of right now? If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.